I expected Bitcoin to probably hit 100K last cycle. Because my first target was for a trillion market cap, which is around 50,000. We got to that, and then once we reached that, I was like, yeah, I think we're probably gonna hit 100K, and then we ended up undershooting that. I'm not particularly surprised with where we are now, though.
Lyn Alden begins by reflecting on her previous Bitcoin price predictions. She initially expected Bitcoin to reach around $100,000 in the last market cycle, after hitting a $1 trillion market cap roughly equivalent to $50,000 per Bitcoin. However, Bitcoin undershot these expectations, largely due to the stagnation in global liquidity over the past 2 years. She notes that Bitcoin's price has historically been one of the best correlates with global liquidity, a key metric that has remained relatively flat. This flatness helps explain why Bitcoin has been trading sideways rather than achieving new highs. Entering this year, Lyn anticipated that Bitcoin would trade higher than its current levels, although she wasn't necessarily expecting new all-time highs. Her bullish outlook extends into 2025, hinging on the timeline of Federal Reserve easing and structural shifts in monetary policy. If the Fed begins cutting rates and transitioning from balance sheet reductions to expansions, this could bolster global liquidity, which Lyn believes would positively impact Bitcoin's price. As global liquidity improves, she expects Bitcoin to rise, aligning with broader macroeconomic trends. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I expected Bitcoin to probably hit 100K last cycle. We didn't get that high. Because my first target was for a trillion market cap, which is around 50,000. We got to that, and then once we reached that, I was like, yeah, I think we're probably gonna hit 100K, and then we ended up undershooting that. I'm not particularly surprised with where we are now, though, because going back to my prior point about correlating with global liquidity has been flat for like 2 years. So the fact that Bitcoin's chopping around, at least on that historic metric, does make a lot of sense. And when we entered this year, I expected to be higher, but not necessarily new highs. So we got those, at least we nominally touched new highs, even though we're not at them currently. And my bullishness really extends into 2025, and is kind of reliant on that rough timeline of Fed easing and then going back to structural. If I thought that the deficits were going to shrink, or if I thought that the Fed was going to be able to stay tighter for longer, then it might have to push back my bullish Bitcoin forecast, because we're basically comparing exchange rates between two types of money. So the fundamentals of both monies matter. But based on the timeline I see, I'm fairly constructive for next year. I do think as we look out to 2025, I'm pretty bullish. I don't really have a strong opinion for the remainder of this year. We were kind of trading in that 60 to 70,000 range for a while. Lately, we've been dipping into the upper 50s, which is not great. But I think that, especially once we turn to a more pro-liquidity environment, if we see the Fed eventually layering in some gradual rate cuts, if we do get kind of that transition from balance sheet shrinking to balance sheet growing, even if it's not at a rapid pace, as those things occur, later this year and then probably for the balance sheet next year, that should probably help global liquidity. And one thing I point out a number of times is that the best correlate that I've seen for Bitcoin price is global liquidity. It's not the only correlate, but it's among things I track that's both logically and then in practice one of the better correlates. And since I expect probably global liquidity to go higher in 2025, and given all the other characteristics we see about Bitcoin at the time, I'm pretty bullish. As far as those really long-term forecasts, one thing to keep in mind is that they were not like inflation adjusted, and so some of the for Michael Saylor, for example, he gave that talk about I think the 21-year price forecast, which is a nice touch. And if I recall correctly, his base case was something like Bitcoin becomes 7% of global assets, up from effectively like a 0.1% or whatever it is now. And so while that is obviously a huge run up, that's basically a 70x appreciation in terms of percentage of total assets, it's not as though Bitcoin has taken over the world in that scenario. So basically, in 21 years, can it go from 0.1% to 7%? I don't really view that as like an outrageous possibility. And that was his base case. And the way that you kind of can arrive at that is something, now, depending on what source you reference, total global assets are, somewhere close to $1 quadrillion, which is a really funny number, 1,000 trillions. I think it's something like 900 trillion, right? That's kind of the baseline. And over time, when you go through growth and inflation for another 21 years, that number is going to be a lot higher. That's going to be a number of quadrillions, like thousands of trillions. And then as Bitcoin goes from, whatever tiny sub 1% it is now, up to, some, presumably higher number of percentage, that's how you get those multi-million-dollar numbers. Even though in inflation-adjusted terms, it's obviously a lot of appreciation, but it depends how bullish you are.
Lyn also delves into the technological advancements in the Bitcoin ecosystem. She discusses the emergence of new technologies such as Bitfm rollups, which are geared towards enhancing Bitcoin's scalability and functionality, particularly in terms of Layer 2 solutions with optimistic fraud proofs. These developments could potentially reduce trust dependencies and make Bitcoin more efficient and user-friendly. Additionally, Lyn highlights the growing popularity of eCash wallets like Fedimint and the Cashew protocol. These wallets are particularly advantageous for small transactions, providing privacy and efficiency. She mentions how the open-source platform Nostr is transforming Bitcoin wallets into a type of decentralized Venmo, making peer-to-peer transactions more seamless and accessible. Such innovations are crucial as they enhance the usability of Bitcoin, fostering its adoption across various communities.
There's kind of two tech paths in Bitcoin right now. On one hand, there's kind of like the BitVM roll-up tech that's kind of interesting to a lot of people. There's kind of more developments of, how would you maybe do an L2 on Bitcoin with optimistic fraud proofs and things like that technically can make, less trust, like federations with more kind of trust characteristics in them, which can be useful. But on the other hand, there's, we've had the launch of numerous eCash wallets. Fedi's the big one, but there's also the Cashew protocol wallets as well, and these are really good for both privacy and for efficiency, especially for small amounts of money. And so that's kind of the example of distributed private payment tech that I think is a good thing. And then in addition, Nostr, even though it's still very small as a social network, one thing it's actually really good at is basically turning Bitcoin wallets into like open source Venmo, because if I wanted to send you Bitcoin right now, it used to be that I'd have to go and be like, so can you send me like a Lightning address or an on-chain address? Whereas like now I can just look you up on Nostr and pay you right away. So it's just there's payment discovery, and so at least among Bitcoiners, or at least among people that at least have some sort of small Nostr foothold, even if they don't actively use it, that actually makes wallets better in practice. And so some of the things that that for example, Ego Death Capital was investing in 2 years ago with for example, some of the Chamba and eCash stuff, the fact that that's now out in the wild is cool to see. And so I think the there's a lot of focus on should America buy Bitcoin or should they not, or things like that. Whereas I think at the end of the day, the kind of usability and growth of the network is really important, especially for all these tools that kind of empower all the different communities, right? You don't want all the Bitcoin stuffed into like, BlackRock and Coinbase. Ideally, you want all these communities around the world to kind of pull some of the custody closer to them, to use it, to understand it. And I think that's where a lot of efforts are best spent. Well, I think if there was a more unified government approach on this, they probably would have already had a Bitcoin strategic reserve rather than just kind of like talking about it now. I think they would already have a meaningful one, which by most accounts doesn't seem to be the case. As far as stablecoins, there are a number of lawmakers increasingly figuring out that stablecoins are a new demand for treasuries. Because if you look at a lot of countries are quote unquote gradually de-dollarizing in the sense that they're buying fewer treasuries than they used to. They're instead buying things like gold, or they're around the margins diversifying the currencies that they buy assets in. But from a bottom-up perspective, there's no de-dollarization. For example, on the black currency markets of Cairo, they're not diversifying out of the dollar toward the Chinese yuan, for example, or in Argentina. The bottom up is still very much dollarized, and that includes demand for stablecoins, which are overwhelmingly for the dollar. So basically, that represents a way to sell T-bills to people around the world, even if their governments are not particularly buying them. And it's a double-edged sword because, and we talked about this before, of how the dollar as the global reserve currency is kind of a two-sided thing. On one hand, it's really good for the state and for Wall Street. It kind of increases hegemonic power. But on the other hand, it kind of deindustrializes the country, because the way we supply so many dollars to the world is through running these structural trade deficits. So most currencies, they trade based on interest rate differentials and overall productivity, and current account balances and things like that. And so they kind of find that natural equilibrium, whereas the dollar has, in addition to those variables, this extra monetary premium on top of it, because it's the most liquid, best one. So all these other countries in the world buy dollars and dollar assets, and so it drives it up above like its kind of normal exchange value that it would have on its kind of trade and interest rate merits. And so we kind of continually run these structural trade deficits. We continually hollow us out, and then that leads to things like political polarization, or realizing we can't make certain medical equipment during a pandemic, or we can't, or our military's got too many Chinese semiconductors, and if you ever had to swap them out all at once, that'd be a problem. So it kind of starts to accumulate issues. And so to the extent that they're successful in injecting more and more stable coins into the world, on the other hand, they'll continue to be successful at probably deindustrialization as well. And it's also just a note about magnitudes. I mean, right now, stablecoin market cap is still below 200 billion. So even if it 5x or more and goes up to over $1 trillion, that's like half a year worth of deficits. And so that stable coins would have to get quite large, even though obviously every 100 billion matters. It would take quite a large growth in stable coins to kind of materially affect U.S. hegemony.
Lyn Alden's insights offer a nuanced view of Bitcoin's trajectory within the broader context of global financial dynamics. She highlights the critical role of global liquidity, technological innovation, and geopolitical factors in shaping Bitcoin's future. As we move towards 2025, Lyn's analysis provides a roadmap for understanding the complex interplay between macroeconomic trends and Bitcoin's growth potential. Whether you're an investor looking to strategize for the next market cycle, or simply keen to understand the forces driving Bitcoin's evolution, Lyn Alden's expertise offers valuable perspectives that can help guide your decisions. Thanks for watching. If you enjoyed this video, don't forget to like, share, and subscribe for more insights on investment strategies and financial tips. Leave your questions and comments below. I'd love to hear from you. See you in the next video.